journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is a chart of the S&P last night. You can see the dotted line is where the gap down. Then we came and we made the big ABCD pattern right on the bottom. You can see drive 1, drive 2, drive 3, set it right 1 standard deviation, and that led us to this mean of the day. It's also very close to that 618, the 382 in the Dow Jones. So this is a bear market, folks. These are going to happen, but remember, tomorrow is going to be the key day. We go back below this low again tomorrow, there's not going to be a lot of folks looking around, would be my guess. I'm going to share a couple things here with you that I feel strongly about. Whether it means very much or not, I don't know, but I'm going to bring it up to your attention here. First, we're going to start out here with this. This is by basically the metals, folks. I want to get this up here. This is silver. Now, silver has gone up. It hasn't made a new high yet, but we got up to 35.05, but we did not make a new high when gold was making a new high. This is a 61% retracement of the high from August the 11th back in 2011. Okay, now next one we're going to take a look at here. The reason I'm showing you this, I think there's the longer term picture of silver on the longer term weekly, and then here's the one of copper going over the last 20 years. And as you can see here, we just made new highs in copper just recently. We're down 40 cents off the high already. High was supposed to be 517 here, 523 here, and the high was 531. So that's pretty close to these numbers. That's where ABCD gives you some of your things that you like to see. Now, this is a chart for the gold showing the weeklies. We're in the 18 weeks up. 18 weeks up. Rate of change means the market is going up at the same slope in the AB leg as it is in the CD leg. In other words, there's not an acceleration. Well, we had a high of 31.61 today, and maybe it's going to go up forever, and it probably will. But I'm just showing you these because I think they have some importance. Here's one of my favorite charts. This is going back 30 years ago, and you can see here, this was Desert Storm. I've told you that story before. You don't have to hear that again. Look at this. We had the ABCD here, and then we had the ABCD here. Okay, that took us to negative. You remember this went negative $18 a barrel when they had that guy trapped, and here's where we are now. This is all ABCD, folks. AB equals CD, AB equals CD, AB equals CD. Okay, let's move over to the next one. And this basically tells us that here's the Treasury bonds. This is my favorite of all, folks. Believe it or not, folks, back here in 2020, they were telling us about negative interest rates, where you would give them their money, and they're going to charge you for holding your money, and they're not going to give you any guarantee that you're going to get the money back or any guarantee on the interest. I thought about that for a minute, and I said, I better hold off on that. That had to be the biggest scam, shut up, Larry, till you don't know what the hell you're talking about. There's a lot of ABCDs up in here, but this was, to me, one of the most amazing, okay? Now, get back here. We've got a couple others that I wanted to show you here. This is the rate of change going back many, many years here in gold, okay? Now here, gold topped in 1980 at 865. In 1980, went into a 21-year bear market. It bottomed in 01 at 238, from 865 down to 238. And then you can see it had a nice 3-year run up into this area right here, 2011. That was when we made the high at 1922 per ounce. Then it pulled back in here to December of 2015, and from there it went up to 30.58 plus $100, where we are right now. Now these are 2-year cycles that are there. You can see this is 2 years up. This is 2 years up, so we've got a lot of things telling us that, yes, maybe this could be a high up in here, folks, but the most amazing thing of all is the fact that on Thursday, Bank of America came out and said we've upgraded our price of gold from $3,000 to $3,300 for the year of 2025. Folks, the darn thing's going up 1% a day, and they make it 10% for the whole year. What's wrong with that? Well, their bosom buddies, Goldman Sachs, on Friday came out with the exact same forecast, 3,300 as the price of that. Then it'll be 3,300 tomorrow, folks, if it keeps going like it's going. All right. So that's all I'm telling you. This is a big deal, and right now the big deal is not working. But someday, if it does, we'll come back on the air and tell you what we're looking at. This is copper on the long-term weekly chart. You can see the big ABCD measures exactly here. We're down 40 cents from that high already, folks. So these may have some ramification on some of these markets or not, but I'm not actually sure. Okay, now let's get back to the nitty-gritty here. Now, one of the things that we wanted to be watching today was the price of wheat, because wheat was going to be on the thing for the shut the front door. The crop report that came out. I forget exactly what Rich told me it was. One of those reports that he tells me what they are, bullish or bearish. But here was the wheat we were watching. We'll get this up here. It was supposed to be bearish, and wasn't bearish at all. We were trying to buy it down here, but it didn't get bought. We had our buy in just a little bit lower than that. Our buy was right about there, and it's had a heck of a run here this morning. That means that meal that we like so much, maybe that was doing okay too, because we've been long meal for a while. And we'll take a look at this and get the soybean meal up, and there we go. This one's down a little bit. This is what we like to see. I didn't realize that. There's main meal is down. See, that's good. It's down from 98 to and I think we're trying to buy that down here at 89 is where we were trying to buy the May soybean meal. So we still might get that bought. So that's an interesting one here to pay attention to. On a longer term basis, folks, I think this has got a real chance to be a good winner, but we'll have to wait and see if that's going to be doing that. All right. All right. The next one we're going to take a look at over here is the silver market. You get the silver up here, and we'll show you what it's doing today. And it's been a lot weaker than the gold, of course, but it still jumps around and goes up and down just like a good metal should. So get this up on a smaller time scale. You can see here, this was our high the other day, was up there at 35.28. Well, there was a higher high back here just a few days ago up here, 35.40. You can see we're considerably lower here over the last few days than we have in the gold market. Today, you can see we did complete the gold. Stop it, Larry. Sorry, I got it. Okay.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is a silver for the last couple of days. You made the weekly high up here on Friday. And as you can see, today's action, you made a big ABCD to the downside, then you rallied back a little bit. But still, gold is still quite strong. Gold's trading at 31.53, had a high of 31.62. I would like to point that out because it was quite really spectacular to watch it here. The way it did it here on, oh dear, what happened to me? Don't tell me I've lost that chart. I'm going to shoot myself in the foot if I did. Yeah. No, I got it. Yay, stop the music. Here was gold this morning, folks. This was Sunday night. This was an early morning high. We made a new high up here at 31.23. Then it backed off, made a perfect 1-3-5 pattern, just as perfect as possible. Then went up and we made the high up here at 31.62 so far. Then it had a huge break, folks. It drove $32 an ounce. You know what the old harmonic number is, stopping at exactly 1.618 of the previous morning's high and exactly at 50% off of the low way back here on March 11th and 61% retracement off of that same number right back here. And that led us to a new high, and now it's just hanging out just a little bit below that level right now in the gold market. All right, now the next one we're going to take a look at. Let's get back to look at some of these things. This to me is the most important thing that could be important. Let's take a look at it. Oh, look at that. Shut the front door and raise the rent. Just a minute, get this out of the way. Okay, no, there's where we go with the old Japanese yen. That's hit our target right up there, 0.618. That's it. So we'll watch it, see what's going on there. Okay, now here is the, we just missed this, folks. This is so far, we got as high as 2042. The low was 2064. So that fulfills the rally of Friday, from Wednesday to Friday, okay? It's a 382 retracement, just like from the prediction that we were looking at possibly. Now that means that if this doesn't exceed this, that means tomorrow this is going to be taken out. We've already taken it out in the NASDAQ. And whether it happens again the same way, I don't know, but it's something to keep an eye on because it's been lining up pretty nicely. And that's about all you can really do. All right, let's move over here and talk a little bit about copper. Okay, here's copper making the ABCD here the other day. Only the trouble is, folks, this isn't copper, this is natural gas. Yeah, I'm full of that anyway. Anyway, you can see there's the ABCD here. There was the low on Sunday night. We had a big run up, a pullback, a run up, a perfect ABCD, and then boom, down she came, and it's been a one-way Corrigan since early this morning. Lots of volatility, folks. You can see here we started to break. There was our first 382 retracement was right here, and then boom, down she came. And so it looks like there's going to be a lot of action going on in natural gas as we look at some of these things here unfolding right now. Also, folks, we had a nice breakout level to look at today in the crude oil. We'll get this up here, and you'll be able to see it 1 second with a little bit of, there we go. There was the original target was here, 70.71, and it's gone way, way beyond that, because what we were watching was there was the big run, and then we wanted to see if this was going to be a perfect 382 retracement, and we haven't done that yet because we didn't get filled, but by golly, there was right there on the low, almost exactly at 382. That means that the folks that are partying everybody around would very, very nice to help hold people. Okay, but there's where we were right here. It's had a big run up to the upside, so that's what we want to be watching here. All right, now let's take a quick look here. It's a big deal, folks. Just don't do this. We watch tomorrow because it's going to be exciting, as they say in the trade. Okay, all right, let's get out of the way here with something else. The euro, all right? Now the euro's backed off a little bit today, but it started out today pretty nicely. You can see there was where we were. And then we had the early morning high up in here. There was your first ABCD right here. The people that sell these things have a hard time selling them because they line up so perfectly with what's been going on that people don't believe that they're actually photos of something that's going on right now. And we'll find out whether that will happen or not. You can see we made the ABCD. Each of the pullbacks is exactly 61% of the other. And if you remember that gold chart that we looked at, that gives you that same 1, 3, 5 pattern, which you take it off, it's going to go higher. So keep in mind, if we go below this, then it's not a pattern anymore. But right now, it's sitting there pretty good. Okay, folks, I'm fading like a lily at Easter, only 3 weeks after Easter. But I'm going to answer a couple questions here on the stock market if I can. We'll bring up Tesla. And Tesla is up on the day. That means it's a good stock because any stock that can be up today is doing pretty good because there's a Monday open and it's been fighting it back, but it's still down from the gap. But at least it's moving to the positive side as it continues to go up. Folks, the action that we saw today is very, very negative. That's all I can tell you. If it's correct, it'll close near in the middle to high end of the range today, and then between tomorrow morning and when they open, and this diagram is correct, then we should start to go down big time in the stock market. But on the other hand, if in fact that doesn't happen, that tells us that this old cowboy is out of luck. Well, I got plenty of luck. It's just not working in the right direction we wanted to today. But we won't have an auction here on Sunday unless we don't get a caller from somebody to tell us what the markets are doing. Okay? Now, this is Tesla. Let's just look at this for the long-term 382. All right? Now, they might get there today because they're not very far away. And there was your 382 right here. Let's just blow this up a little bit. And we have to do the ratios in here to make sure everybody's watching. Okay, that's what we got going there with Tesla. Now we'll take a quick look here at Apple and see what is going on with Apple. Wow, my eyes are blurred, folks. I don't know if I'm going to be able to make this second segment here or not, because, boy, I'm really fading like a lily at middle of Easter. Okay. Yeah, it's hanging in there. Okay, Apple, doing all right. Okay, I think that's a break time. I'll keep trying to go through if I can and try to get some ideas for you. I've got them written down here. The problem is I can't remember what they were and where I put the piece of paper. We'll be right back, folks, so stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Larry. Larry's feeling really tired, and I happen to be. I said, I've got 30 minutes free. I'll take over. Not that I can take over Larry's work, but at least take over the half hour of the show that's left. So let's just do this again. I did my show, the Target Ignitions Hour at 10 a.m. Eastern Time. So let's just do this. It is now 1:31 Eastern Time. And we've got the Dow up 84. So this is very interesting. So there are patterns that I look at. Actually, let me just do this right now. Let me go there. Got it. Let me grab the pattern. Okay. So I always look at particular patterns. I think there are three core patterns that I look at, and these are just directional patterns. One is straight up, straight down. The other is a cup formation. It could be a V-shaped formation going from one point down and then back to that point. And another one is the arch formation, going from one point up and then back to that point. You can mix them, 1 and 2 and 1 and 3. 1 and 3 is the pattern that I call the dreaded H. Why? Because if it arches over and fails at a peak A or a B, it can go a little high, but if it fails and takes out decisively this left side low and then closes under that left, doesn't matter whether it's a 1 minute chart or a month, 1 month chart or a yearly chart, if it closes 2 out of 3 bars above that left side low, that says, great, you can have a rally to the arch high. If it doesn't even get there, but it rallies sharply, it says not only can you go to the arch high, but you can actually start another concerted move to the upside. All right, so this is the pattern that we were looking at. Here's the Dow. Now, let me just move the chart over here. There we go. So we've got this chart that says there's the H pattern. We've already had a bunch of them. This is short. This is the Dow, so that we have been short for quite a while from way up there. So this is what we're looking at. This pattern, this 40,661 in the Dow from the 13th of March, has not taken out that low. And look, there's the weekly chart making lower lows. So I use a technique that says sell signal gets upgraded to a sell mode. It should go to at least 4 higher peaks. That's peak A, peak B, peak C, peak D is the fourth, and then it could even go higher. It depends on circumstances and the technique involved. And then the arch pattern that makes a double arch, you've got to watch that left side low. So the weekly chart has gone below the low that was made at 41,647 back in November. And we've got 2 bars, and this is the third one. We're going to see where we close this week. Right now we're at 41,664, and it's only Monday. All right, so let's do the same thing with the S&P SPX. Well, so you see this middle chart, the weekly, daily, weekly, middle is the weekly, on the right is the monthly, and we're going to close the candle for the month right here. This is just a lousy candle, but look, it's a lousy candle. It's 5555. But we made an all-time high of 61.47. But there is a doji candle followed by this big red candle. I use the 9-period moving average in the 49. For Larry, it's anathema. He uses his own techniques. He never uses the moving averages, but he knows that moving averages for certain people in certain conditions work very well. And here it is. The 9 is way over the 14. So this is still a very strong monthly chart. Not so in the weekly. The weekly's gone pink. That means the 9-period moving average is negative. So this is in a sell mode. This is still a buy mode. Monthly chart, S&P, sell mode in the weekly. That just designates a certain standard that has reached. It's reached a certain level. And that essentially says the price movement and the action has been enough to give it a sell mode designation. It doesn't say, oh my God, now you're going to go down to, it just says this particular mode right now is a sell mode. Sell mode in the daily went to a leg E below the 5504 low of the 13th, went to a peak C. See these arch formations? Now, sometimes these correspond beautifully to the butterfly patterns or the Gartley patterns of Larry's. But in the meantime, what we are looking at is, I'll do this quickly because new techniques. So QQQ, same thing. There's the dreaded H, the H pattern. We went below the 467.01 low. Today we went down to the 457s. It's trying to bounce, but it has taken it out. And that means that any rally should have a difficult time closing above this high right here, at least in the shorter term. And that is the high of the 25th of March of 493.62. So as that stands, sell mode in the Qs in the daily, sell mode in the weekly, and a very strong down move, but still not yet even a sell signal in the monthly charts. I want to go now to the bonds. Bonds had a fantastic move to the upside today. Great candle on Friday. Great candle earlier in the day. It went right to where? To this trend line resistance. Now, I don't use I try to keep it clean, but it's getting a little messy. So here's your cup formation. Here's your arch formation. We were looking at those just a moment ago. And it went right to the Chapman Wave inside track repellent zones. And let me just give you a little color there, color green. If it breaks out and closes nicely above, that's good. If it closes below this, it's just being repelled by the pink. And I call that the Chapman Wave inside track repellent zone. So if bonds can move high, now this is the first time in decades we've had the last 5 years, where 3 years particularly, where bonds, when the market has been very weak, bonds have gone down as well. Yields have gone up. This is the first time they've actually been kind of static. We haven't had bonds tanking. They've been holding very well. So here's your lowercase h in the monthly chart going to a lowercase m. It's just stuck in a range. Now, I've been saying that for me, the way I look at the markets, as long as bonds are not, the yields are not going crazy to the upside, they're kind of, there's no existential threat. It is just there. It's okay. We've got all these other things. We've got the tariffs, etc. So one of the things I was looking at is, here's the volatility index, VIX.X. Very strong move to the upside today, given back a chunk, but still up 89 cents at 22.54. That's different to when it went to 29.57 2 days before the 13th of March, the big rally in the market. But look how it held the 200-period exponential moving average. So either this is a brand new move to the upside, saying that whatever happens now, let's just go to this. So the whole thing with the tariffs, and let's just see what GM is doing. GM right now is up 11 cents at 46.79. Not a great looking chart, but holding okay. Let's see Ford. Ford had a horrible slide to the downside. It went to 9.55 and now it's trading at 9.93. Still not great, but better. So let's just imagine for a moment that the market assesses everything and that today's low turns out to be a low. I don't see any reason why I can consider it even the low, but it is possibly a low because Trump does look at things. And even though he says he's not looking at the market, my guess is that other people are telling him what the market's doing. And he'll want to alleviate a big plunge from here because he doesn't need that now. The market's lower, that's fine. But much lower, I suspect he'll do something to ameliorate that, even if it's just suggestions that the market likes. We'll see what happens. I'll be right back. Basil Chapman.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, Basil Chapman sitting in for this half hour with Larry. Larry did 1 to 1:30 and then he's just really tired, I guess. Larry does this trade. I don't know how he finds the energy. It's incredible. He just trades what he sees and whatever time it is. Most importantly, on Friday, I managed to step into his workshop, the live trading workshop that he was doing. Whenever I get a chance, I do that because he has this methodology that does a measured move in such a way that sometimes it's within pennies, and you're looking at a contract that's quite heavy in price. And it's beautiful to see, and I love watching that methodology. So let's just go high grade copper. Remember, the fourth highest peak is the peak that other things can happen in. Chapman wave should get you to a buy signal, upgrade to a buy mode, and then D is where other things can happen. Well, copper in the daily chart made a peak D on the 14th of Feb, pulls back, holds the 9. Look how that 9-period moving average held all the way through those candles that went below the 14-period moving average. So it remained green, goes all the way to another D. Now it's a peak D. I haven't put a down arrow. I usually put a plus on Ds, and that could be upgraded to a down arrow if copper starts at 5.04, for now 5.03, down 0.09. If copper starts to pull back to about 4.8, to get this green line to go pink under the black line, I would just say 4.82, at least 4.82 will do it. So right now it's still holding pretty nicely. We've got a peak C. There should still be a D in the weekly chart and a leg E in the monthly chart. So we'll see what happens there. Now I wanted to do this. So Larry always is looking at wheat. Das Wheat. This is the H pattern. Look, peak D and an H pattern comes back, breaks the low for 1 bar, closes above it. 2 bars, closes under it. No, closes under it. And today it's above it. So this could save the day to say that wheat, if it finds a little bit of, at least a chance of a low right here. And in this technique, usually if it takes out the left side low in the arch formation, at least by the second candle, that usually goes 1-to-1 to the downside. So this kind of saved the day for it. And wheat right now is up. This is a continuous contract, up 9 at 537.25. So if wheat is able to get above the black 14-period moving average, that's at 547 this week, anytime this week, but it needs to close 2 out of 3 sessions, so that actually takes us into next week, 2 out of 3 sessions above the 547 level. That'll be a change in trend for the short term in wheat. Right now, it's still in the sell mode. Let's go to a continuous contract of soybean. This is the soybean continuous contract. So this pattern, I invariably just grab the outer wicks of the candles, and I draw this and I say, okay, that's my trading band. Is moving towards the upside. So let's make this rectangle. Let's give this not the low that was made there. Let's go right there. We've raised it, and we'll keep the high that was made in soybean on the at 1,000 and oops, where did it go? 1,035, 36 and a half that was made right there on the 6th of March. And now it's just gone in the rectangle pattern. But you can see I can draw in. Look, an arch. There's the H1H. Here's another little one. And here's another little one. All right? This could also be. But what's really happening is that the 9-period moving average is pink and is starting to get close to moving green. If it moves green, the MACD's moving average is good. The stochastic's running, but this on-balance volume, it says volume's just not coming in. So what I'm looking at here, I like to draw trend lines. Look how beautiful this trend line is right here. So if I join this is the continuous contract for wheat, and I put in the technique that I showed you just a little earlier, and I say, let's call this the Chapman wave inside. I say Chapman wave because it's my technique. And I haven't sent anything for all the decades and decades that I've been getting the Stocks and Commodities magazine. I've always prepared and prepared, but I've never actually sent it in because they're like a whole story, and I make things real quick, real simple. So look at this. This is a Chapman wave inside track propellant zone. That means at any point in the next week, if it starts to trade in the 1003 area, you got to be careful, because if it slides under 997, that's not a good sign for wheat for soybeans at all. Now look at this. You've got the weekly chart. There's the H pattern. There's the lowercase h that goes to a lowercase m. This is, look at that monthly chart. 914 is still very weak. This is saying soybean right now is having a really difficult time. However, look at this. Corn. So all the commodities, now I have to raise this because I do all my notation by hand. I know it's dumb because in this day and age, but there are subtleties that I have in my waveform that just require me to do this so that I don't miss a particular pattern that is very important. There are two B's because this B's underneath that one. There's your A. And Steve Rhodes has done a great job of actually using the Chapman wave technique and putting into a form that's he's been able to program it, and it does a really good job. But as I say, there are those subtleties that I need for my work, and I haven't been able to find any way to not do it visually. So I guess when I'm gone, Bill Bailey, we'll be having to, AI will do it for me. I'm beginning to work with AI, so I'll see if I can do that. Look, here's your H pattern. It closed above, just took it out by a fraction on Friday. The low that was made in the continuous contract for corn, and that's 542 and a half. And what did it do on Friday? It went to 442. So by half a point. So this is actually a successful, it's 442. It took it out. So this means that this rally, you have to look at the next peak over there as tough to get through. And if it does, then you go to the 200-period moving average of 474 and a half. But in the meantime, this is attempting to make, look, the MACD held well. The stochastic was higher than it was. On-balance volume now is finally moving up. And this little gray line is the relative strength, the daily. Weekly chart says, whoa, you got a lot of work, mister. If you think you're going to go from pink to green, you're going to have to go all the way into probably the 424 level. So that's corn. Okay, now there's a couple of things that I think are very important right at this particular moment. What I wanted to show you something. I didn't even show it on my show, the Tiger Technicians Hour. So the dollar made a peak C1, C2. Now, in that my work, if it just fails to go to a D, but the technicals hint through their action that rally had all the makings of a D. It just didn't get there. I put it in as a phantom peak. C1 and C2 acts like a D, and then you got to be careful. Well, lo and behold, the dollar has gone from 114.78. Now, I've got to mention that we are long in the opening call, my newsletter, from 2018 at 90. We've written it all the way up to the 120s and then back down. The UUP, the position that we have, never got stopped out. We rode all the way to 140.78, and now it's come down to the middle of the range. I'll talk about it as soon as we get back, because this is very important. It's stalling as the euro has rallied and now is holding nicely, but has pulled back a little bit. I'll be back in a moment. Basil Chapman sitting for Larry Pesavento.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting for Larry Pesavento. So instead of going through all that other stuff, you can watch my show, Tiger Technicians Hour at 10 o'clock, but I'm just going to do this live. Look, the E-mini right now is down 16 at 56.06. It actually ran all the way to 56.17 after being down at 56.33 earlier this morning. There's some sense that the market is trying to see that there's an alleviation of the whole tariff fear. And if that works, today, if there is a move, we're up at 56.05. If there's a chance that there's going to be a further rally today, you will see a break of the 56.12 level, 56.13, and it should be quite quick. And then this 200-period moving average in the It's anathema to Larry. I shouldn't be mentioning it on his show because he doesn't use moving averages. But look, this 200-period moving average was a fantastic repellent zone right there. That peak D right up, stop right there. Look, the last time it was there on the 27th at about 3 o'clock in the afternoon. So as I see it right now, what we're looking at is the first time that we're getting even close. We've been close before, but it couldn't break above the 200-period moving average. This is the first time that there's at least an opportunity to get there. Look, the green 9-period moving average, the MACD did pull back a little bit stochastics week, but that 914 holding strong, that's really important. So if there's a move to about 56.12, 56.13, then there's 56. Now it's at 19 because it's a declining trend line. It was 21 before, but yeah, it's 56.19. If that's tagged, that'll be and when you get this close, it's very often the next move is to go tag it. So we'll see what happens, because if it can hold and at least have a decent up day in the Dow, the other indices come back off their lows, it gives us a little cushion for tomorrow, because tomorrow is going to be very important in the sense that either we get a relief rally and we'll watch things like General Motors and Ford, or we're kind of stuck because we go back to the lows, and that just says now we've got a horrible close on the monthly chart of all the indices, and now we go into the next month really poor. I would like to see, at least in the next day or two, a very strong move up to at least alleviate some of that pressure. But sell modes in the daily chart.